After exploding by roughly 150% in 2025, Palantir Technologies has become one of the most celebrated and divisive stocks on the market. On one hand, you have an army of bulls, led by some of Wall Street's biggest names, calling for a future trillion-dollar valuation. They see a company at the absolute epicenter of the AI revolution, firing on all cylinders. On the other hand, you have the bears. They're sounding the alarm on a valuation they call dangerously overstretched, warning that the slightest misstep could trigger a painful correction. The battle lines are drawn. As 2026 kicks off, with the stock taking a breather after its massive run-up, the question on every investor's mind is simple. What's really next? Is this a generational buying opportunity, or is it a textbook bubble about to pop? We're going to cut through the noise, dissect the numbers, and break down both the bull and bear cases to give you a clear-eyed view of what to expect from Palantir in 2026. So how did we even get here? 2025 was, without a doubt, a landmark year for Palantir. The company didn't just meet expectations, it shattered them, quarter after quarter. The narrative decisively shifted from Palantir being a secretive government contractor to an indispensable AI powerhouse for the commercial sector. The numbers tell the story. In the third quarter of 2025, Palantir posted jaw-dropping revenue of $1.18 billion, a 63% jump year over year. But the real headline was its U.S. commercial revenue, which surged an astonishing 121%. This wasn't just growth, it was an acceleration, proving that its artificial intelligence platform, or AIP, was seeing what the company called unprecedented demand. This phenomenal performance led to Palantir achieving a Rule of 40 score of 114. For those unfamiliar, the Rule of 40 is a benchmark for software companies where revenue growth and profit margin should add up to 40% or more. Palantir's score of 114 puts it in an elite, almost unheard of category, signaling a rare combination of high-speed growth and incredible profitability. This financial strength, combined with its inclusion in the S&P 500, created the perfect storm that sent the stock on its meteoric trajectory. With that backdrop, let's build the bull case. Why do bulls, with analysts like Wedbush's Dan Ives leading the charge, believe Palantir is just getting started? The argument rests on three core pillars. First, and most important, is the dominance of its AI platform, AIP. The best way to understand AIP is as an operating system for a company's entire data universe. It lets organizations safely layer powerful AI models on top of their own private data to make faster, smarter decisions. The genius here isn't just the tech, but how Palantir sells it. A huge part of this is their AIP bootcamp strategy. Instead of a long, drawn-out sales process, Palantir's engineers embed with a potential client for just 5 days to build live, working AI tools that solve actual problems. This tactic has been a game changer, dramatically shortening sales cycles and proving the software's value almost instantly. The second pillar is the commercial explosion. For years, the big knock against Palantir was its heavy reliance on government contracts. But 2025 proved the commercial business isn't just a side project, it's the main growth engine. With U.S. commercial revenue growing at 121%, Palantir is proving it can win in the most competitive software market in the world. This isn't just about adding new customers. It's about expanding within existing ones, with clients like Airbus, Morgan Stanley, and Merck deploying the software across their operations. Finally, bulls point to a steady and growing pipeline of massive government contracts. In July of 2025, the company reportedly secured a landmark deal with the U.S. Army that could be worth up to $10 billion over 10 years. There's also the adoption of its Maven AI system by NATO and talk of Palantir playing a central role in new federal automation initiatives. These huge multi-year government deals provide a stable revenue base that supports the faster growing commercial side of the business. When you combine a dominant AI platform, a hyper-growth commercial business, and a bedrock of government revenue, the path to $1 trillion valuation starts to look less like a fantasy and more like a roadmap. Now we have to address the elephant in the room. For every bull screaming about $1 trillion future, there's a bear pointing to one thing: the valuation. This is the core of the argument that Palantir stock has simply gotten too far ahead of itself. Let's put this in perspective. At its peak in 2025, Palantir was trading at a trailing price to earnings, or PE, ratio of over 430 and a price to sales ratio of over 115. By that sales metric, it was the most expensive stock in the entire S&P 500. Some analysts point out that Palantir could lose over half its value and still be one of the most expensive software stocks on the market. The bears argue this kind of premium valuation leaves absolutely no room for error. If revenue growth slows even slightly, or if there's a miss on earnings, the stock could face a severe and rapid correction. The market is pricing in perfection for years to come, and any deviation could be punished. We're already seeing signs of caution as the stock has pulled back to start 2026. There have also been reports of major investors like Cathie Wood's ARK Invest trimming their positions, suggesting some are getting nervous about the high price tag. Furthermore, bears question long-term sustainability. International expansion has faced headwinds, with some European nations expressing concerns over data sovereignty. Analysts with extremely bearish price targets, some as low as $50, believe the company is still more of a high-end consulting firm than a scalable software business, arguing the current AI hype is just that, hype. Their point is simple: no matter how good the company is, no stock is worth buying at any price. So we have two compelling yet completely opposite arguments. The bulls are betting on a revolution, and the bears are focused on the valuation. How do we synthesize this? Let's go back to the data. The central conflict is growth versus price. Is 63% year-over-year revenue growth, 110% jump in adjusted net income, and a Rule of 40 score of 114 enough to justify paying over 400 times trailing earnings? For the bulls, the answer is a resounding yes. They believe that with the AI market projected to grow at over 35% annually for the rest of the decade, Palantir will grow into its valuation faster than people think. For the bears, it's impossible. They see growth projections already decelerating from the 60% range into the high 30s or low 40s by 2026, which they argue isn't nearly enough to support the current multiple. So what does Wall Street think? The professional analyst community is deeply divided, which is why the consensus rating is a hold. The average price target going into 2026 sits at around $187, which implies only modest upside from late 2025 levels. This tells you that while analysts acknowledge the incredible technology and growth, they are struggling to justify a higher price. The price targets themselves have a massive spread, from lows of $50 to highs of over $250, reflecting the fierce debate we've just laid out. So after laying out both sides, what's my final verdict for Palantir in 2026? I believe 2026 is the ultimate prove-it year for Palantir. The company has successfully built the narrative. It is the premier operating system for enterprise AI. The technology is lauded, the demand is real, and the growth is undeniable. But now, with a market cap that was hovering near $425 billion at the end of 2025, the expectations are monumental. In 2026, the story won't be enough. It's all about flawless execution. The key metric to watch will be U.S. commercial revenue growth. Can it continue its triple-digit tear? Can the AIP bootcamp model keep fueling rapid customer acquisition? If the answer is yes, and Palantir once again raises guidance throughout the year, the stock could defy the bears and begin its next leg up. However, if we see that commercial growth begin to decelerate faster than expected, the bear case will be validated and the stock will likely re-rate lower to a more reasonable multiple. Ultimately, Palantir stock remains what it has always been, a high-risk, high-reward bet on the future of artificial intelligence. It's not a stock for the faint of heart or for those with a short-term time horizon. An investment in Palantir today is a bet that the AI revolution will be as transformative as the internet and that Palantir will be one of its chief architects. The price for that ticket is steep, and 2026 will be the year we find out if it was worth it. This is one of the most fascinating stories on the market, and the debate is far from over. If you found this balanced analysis helpful, do me a favor and hit that like button and subscribe for more deep dives into the market's most compelling stocks. And now, I want to hear from you. What are your thoughts on Palantir's future? Are you in the bull camp, predicting new all-time highs in 2026? Or are you with the bears, believing the valuation is unsustainable? Let me know your price target for Palantir in the comments below. Thanks for watching, and I'll see you in the next video.